Hello, everybody. Today I'm going to be talking about that Section 41 R&D tax credit, not about the tax credit itself so much, but more about the misuse and fraud that goes hand in hand very often with this tax credit. But I am going to give you a quick overview. Yes, the tax credit exists. Yes, it's up to 20% of R&D costs. It is specifically for tax-paying businesses that develop, design, or improve products, processes, formulas, or software. So yes, it is there. And yes, if you have an R&D program in place and you realize you missed including some of those R&D costs, or you didn't understand what costs were in there, or there was just something altogether like you didn't even know the program existed, then you can go back and amend your taxes to get those credits. But here is what's been happening for some of my clients. There are companies reaching out to them, particularly my chiropractors for some reason, letting them know that they may qualify for this Section 41 R&D tax credit. And then they go through their tax returns. They have an independent lawyer asks them some questions. And I'm going to tell you right now, that lawyer really isn't that independent. They may have their own business, but these two companies are in cahoots with each other. And then they convince my clients that, oh, this is research and development. We're going to amend your tax return so that we can collect those credits. That's really frustrating for me because the R&D tax credit is complex and there are a lot of requirements that come with it. And one of them is you can't just go back and decide it was R&D costs unless you actually have an R&D program in place. They expect to see you experimenting. They expect to see empirical data. There's a lot of stuff in the research process that they expect you to be documenting and keeping track of. It's actually very laborious and very detailed. Okay. So important that you understand that you just can't go back and decide you had a research and development program in place when you definitely didn't. And so that's what's happening is they're telling these people that these qualify for research and development costs, but they really have no program in place. It's one thing if you have a program in place and you discover some costs that you missed. It's a completely different thing when you had no idea you were doing research and development, because that's not what was actually happening. And you can tell that I'm very frustrated with this because they're going behind the CPA backs, they're amending returns, we're finding out about it after the fact. And the bottom line is I don't agree in almost every case that this is actually research and development. Now, please keep in mind that I have clients who do utilize effectively and compliantly the R&D Section 41 tax credit. It is there, it is viable, okay? But this is one of those things that actually gets red flagged for an audit. I took a class with the IRS. So this is straight from the mouth of the IRS that if we go back and amend your tax return and suddenly claim an R&D tax credit that you have never ever even mentioned before, it does red flag you for audit. And they have a lot of criteria. And one of the things that they said is that almost all of those get disallowed. So if somebody approaches you and says that they can get you an R&D tax credit, the first thing I want you to do is call your CPA and realize this may not be legitimate, but they do a lot of things that make it legitimate, make it seem legitimate at least. Okay. So one of the things they did for one of my clients was they looked at several tax returns. Nope, this one doesn't qualify. This one doesn't qualify. Oh, but last year's qualifies. And then they started to amend that return for a very small amount. And then of course, I'm talking to the client and I'm trying to explain to him what my problems with this are. I mean, he was very smart and he did give me a call and let me know what was going on. So that was very, very helpful. And at one point in time, I said, listen, I just need to talk to them directly. You know, I understand that the IRS regulation is very, very big and I don't know everything. So I have no problem talking to these people directly if they're going to teach me something new. But in this particular conversation, what they told me in this particular case was that there were special rules in place for chiropractors and that one of their people had served on the board while all of this regulation was being put into place or being amended, or I'm not even sure what their specific excuse to that was. And I said, okay, please send me the information. They even said, hey, we're more than happy to send you this information. Okay, great. I really would like to take a look at that information. and I never got it. They never sent it to me because to this day, I still do not believe that was legitimate. And they were just trying to get me and convince me that, oh, yes, absolutely, this is a good idea for my client. They were never going to convince me of that, though, because I understand the amount of work that goes in to the Section 41 R&D tax credit. It's really important. Now, I'm not saying don't get the Section 41 tax credit. Get it if you have a legitimate research project in place to accomplish the goals I listed off earlier. So just be careful, tread lightly, and make sure you call your CPA consultants to make sure that this is something that is really something you should be doing. I know I'm very frustrated, so I may not be as clear as always, and I do apologize, but I need to get this information out there. Just be careful. Okay, so next week, I am actually going to be talking about the capital gains exclusion on your primary residence. Right now, the real estate market is super hot, so this is a question that I'm getting on an almost daily basis. So we're going to talk about it next week. We'll see you all then.